Hi, everyone. Happy Wednesday. So today we're going to talk about a topic that came up just last week that Jane and I were talking about for a client. It's a client who's opening up a business, and this is one of their many companies. They're going into a bit of a different industry, and so they're going to be making quite a large contribution and investing a lot of capital with a new partner. And the question that they had, or rather, they were quite sure of what they wanted to do with that initial investment. So it was less really of a question and more so letting us, as their attorneys, know what their next steps were going to be or what they had planned for. Was that they were going to invest a significant sum of money. In this case, it was going to be um, just to use a number as an example, we'll say $100,000. Uh, and what their plan was that they were going to take that money back, that initial contribution that they make monthly in certain increments. And then the difference of it, they were going to take back as a balloon sum at the end of 2 years. And so what I had asked was, well, what documents are you going to formalize this in? Will you create a operating agreement and formalize it in there? Will there be a loan agreement and so on? And they weren't planning on having any documents at all created for this purpose. So, of course, as always, I strongly recommend that if you go into any partnership or any business at all, that everything is formalized. If you're taking any money back, that there's a way of differentiating whether that was a disbursement or whether that was a return of capital, a return of loan. If that was a loan, is it subject to any interest? And it's definitely better to do so with an operating agreement right at the beginning so that it's all clear with your partner what the plans are going to be. In this specific situation, the other partner is not contributing anything whatsoever. And so that's really concerning when we see that happening because it's just welcoming questions down the line if things are not in writing and there's someone that has a different expectation or a different assumption. And then, of course, the second question is going to be, how do you at the end of the year make sure that all of this is accounted for properly? For example, it's a loan, there needs to be appropriate loan documentation, there are certain interest minimums and so on. So really important to get all of this down in writing and on paper. But the question that it brought up and what I had spoken to Jane about was, what are the different types of ways in which a business owner can receive that compensation back for themselves? And that would open up that conversation of what can they do next. So Jane, I wanted to ask you just if you could tell everyone a little bit of what we had spoken about this week. What are those different options? What is available to the partner in this situation, or really just business owners in general?
Thanks, Irene. That is a great question, and everything you've mentioned to your client a really good point. So basically, when they're, giving money as a contribution, it's really, really important to have proper bookkeeping because every time they are taking a distribution against the contribution, or if they're taking some sort of loans, everything has to be accounted for. And sometimes they could miscalculate how much they put in and versus how much they actually paid out, and they could be subject to taxes, they could be subject to different kind of ways that this should be appropriated, and they're just not even keeping that in mind because to them they think that this is going against that original contribution. So, one of the ways that we could pay ourselves as business owners is just a simple distribution, but we have to keep in mind that at that time it's not subject to Social Security, Medicare, and other tax withholding. So if you are an LLC, you could take out money. Just, you could write a check and this, and it could be just a distribution that is allowed. But if you are a C Corp or S Corp, you are obligated to pay yourself a salary. And that salary is sort of subject to, it should be a reasonable salary. So a lot of people use pay scale. They could see how much you're supposed to be making a salary for a certain business type, which is also kind of hard to estimate because I've read that an average small business owner salary is 62,000 per year. And if we were to Google any salaries, I would think that would be significantly underpaying um, for certain type of job. So that is subject to what IRS thinks is appropriate, and that is definitely not an exact amount that's easy to say. So you should work with your accountant, your CPA. You should really make that salary what it should be. It's really not good to underpay yourself at that time because you're going to be subject to more taxes and penalties later. And then in that sense, I think just at the end of the day, you have to keep proper records. And Irene, just going back to you, I think it's really essential to have all the operating agreements and all the contracts you could have at that time, especially if you have partners. It's really, really important.
We've just seen this go wrong so many times when there's that expectation, and that's not what happens at the time of payout. But also, we've had situations where end of the year comes and the question comes up, well, what was the purpose or what was this funding? And this is a really simple situation here where it was just an initial payment. Rather, this was more so navigating and helping the client navigate. But we see a lot, especially in certain real estate development, um, contribution or these capital contributions, these continuous capital contributions will continue onwards. You could have one a month. You could have different classes of shareholders or interest holders have to contribute at different times. And if that's not all down on paper, having to figure out profits at the end or having to figure out what the repayments were at the end or at the end of the year when you're doing the finances becomes impossible then. And that's just inviting those risks. So for a lot of reasons, it's really important to get all that down in the beginning.
I agree. Well, as usual, if you have any questions, please feel free to reach out to us. Thank you, everyone.
Thanks, everyone.